Hello and welcome to another quick update about Rune. Has been a while. I think on the 18th of March was the last update about Rune, and Rune has developed perfectly. In line with expectations as well. Yeah, absolutely textbook correction ABC. Yeah, it did get into the target area. Very nice. Unfortunately, here in terms of where it did get to in terms of the correction, it pretty much touched that previous low, the wave A. Ideally, you want to see a little bit of a lower low, but that's fine. Call it truncation, making the same low as the wave A. That is okay. Not great generally for the chart. However, it is coming to the target area between those fib levels, and it touched the 88.7% fib level. It broke out of the descending wedge. It climbed higher. It broke above the 200-day moving average. And in the last video, we had just broken above the 200-day moving average. Let me just show you. We were at the 200% Fibonacci extension, yeah. And I told you that what I would love to see would be a retest of the 200-day moving average. And well, I didn't do an update after that, but it did exactly that. And I told you that this could be a wave 4, and ideally we want to see that retest to start the wave 5 afterwards. And that is perfectly what it did, which is amazing. But now it looks like it has completed its wave 5. So if we want to count that, we can count that very nicely as a first impulse. 1, 2, 3. That is that wave 3 that we completed when I made the last video, just below $10. Then we came back in a wave 4, yeah, and we moved up in that final wave 5. So it did pretty much what we expected, all going according to plan here at the moment with Rune. Very pleased about that. In terms of the Fibonacci retracements, is this really the wave 4? Let's take a look. What does a wave 4 need to do? Well, it needs to do the minimum of a 21.4% Fibonacci retracement. That was here the 841. It did that. Ideally, you want to see the 38.2% fib level. I understand it didn't get there, maybe because of the 200-day moving average, and that is fine. It was okay. It could have been a wave 4. Now it looks like that we completed the wave 5. So as I said, came up here in 1, 2, 3, 4, 5. And yeah, we might now start at ABC. And this would be the first impulse, okay? And in that first impulse, we usually, again, take the Fibonacci's, yeah? And we want to get the retracements. And what you usually do in that retracement, you would come down at least to the 50% Fibonacci retracement. And that would be here at $8.14. So that is at least a level where I would expect this, if this is already the ABC that we want. Yeah, so what we'll probably get here. Again, I don't know yet if this could become an extended wave 5. It does not necessarily need to be over yet, but this would be the level, if the price is going to reach that, where I would start to dollar cost average in again, yeah, because this could be an A, B, so there will be some more upside at some point before we get down in a C. The wave B typically retraces to the 50% fib level of the wave A. So again, if you take the fib levels the other way around, and let's say this was already the completion of the wave A, then you would expect the wave B at least to come up to $11 roughly, yeah? Or no, $12 roughly. So, but we haven't seen that counter reaction yet. Could it be that this was the wave A, that this here was the wave B, and this will be a wave C? Possibly. Unlikely. Yeah, unlikely. Because you need to reach that 50% retracement level at a minimum, in order for it to be a wave 2. If it doesn't get there, then the chances are higher that we are climbing even higher. So if you see the turnaround before that, break above that wave 5, and therefore that level is so important here. If we break above that again, above roughly here $13.30, then this was not yet a wave 2. The minimum level for that wave 2 would be the $8 level, I would say, yeah. And if we then move higher, then we can be certain that there will be at another point that lower degree level correction. So at the moment, looking extremely good, going according to plan at the moment. As I said, what I would, just by looking at the chart here at the moment, expect is an ABC correction coming down to roughly $8 again. The indicators, do they support it? Well, let's take a look, especially here on the daily chart. I would say so, because on the daily we're just now printing here that bearish crossover on the daily MACD. Now again, it's only one indicator, but what we also need to understand that we were overbought on the daily RSI. Now this is coming down, so there is possibly some more downside potential here now with RUNE, before I would then buy more RUNE. Yeah, I hold some RUNE, but not much. But this is what I would do when we get to that next low, and then, but that would be the minimum, yeah, that $8 level, can also go lower. And then we will turn around and get to that next larger wave up. And that is pretty much my view here on RUNE. Just sort of a short update really, because it's doing pretty much it's going all according to plan. What I really like about RUNE is that it broke above so important resistance levels here, $8.80, the 61.8% fib level, broke above $11.40, yeah. And it has potential, in my opinion, to go all the way up to 17.69 before there will be also a larger correction, because this is the wave B. If we move above that, I think it's very certain that we can get to new all-time highs. This is a very, very important resistance level here at $17.80. Okay, so that's my view about RUNE. Hopefully you liked the update. If you did, please hit the like button, leave a comment, subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.